My name is Margot Ellison, and I am 46 years old. 19 months ago, I signed our divorce papers that divided assets I now know were approximately 40% of what actually existed. I did not know that at the time. My attorney did not know. The mediator we had used to avoid a contested hearing did not know. The financial disclosure my ex-husband Daniel had submitted to the court, certified under oath, showed a marital estate of approximately $1.3 million. The house, 2 retirement accounts, a jointly held investment portfolio, and his share of a small consulting business he had co-owned for 9 years. What Daniel's disclosure did not show was a second investment portfolio opened under a trust he had established 3 years before the divorce in his mother's name. A series of loans to the consulting business that appeared as liabilities on his personal disclosure, but were, in reality, transfers to an account he controlled through a shell company registered in Delaware. A commercial property purchased 18 months before our separation and titled in the name of that same shell company. And a pattern of consulting income redirected through a second business entity that had been operating quietly for 4 years while our marriage was still technically intact. Total hidden assets, as calculated by a forensic accountant 14 months after our divorce was finalized, approximately $2.1 million. I did not discover this through my own investigation. I did not hire a private investigator or retain a forensic accountant or fight a contested divorce that might have surfaced it earlier. I discovered it because Daniel's own accountant, a careful man named Robert Kessler, who had handled Daniel's business finances for 11 years, conducted a routine annual audit of the consulting business 8 months after our divorce was finalized, found an irregularity in the loan records, pulled the thread, and discovered, over 3 weeks of increasingly uncomfortable reviewing, that his client had committed perjury in a family court proceeding. Robert Kessler then did something that Daniel had not, apparently, considered a possibility when he constructed his hidden financial architecture. He called his attorney and asked what he was legally required to do. Before I go further, please like and subscribe if you are new here. Drop a comment telling me where you are watching from and what time it is. I read everyone. Now let me take you back to the end of a 20-year marriage, and the specific way that a man who believed he was the smartest person in any financial room he entered forgot to consider that he had hired someone smarter to manage his books. Chapter 1. 20 years and 1 disclosure for me will keep the background brief because the marriage is not the point. What was hidden inside it is Daniel and I married when I was 26. He was a management consultant, methodical and precise, in the way that people who are very good at financial analysis are methodical and precise. The kind of person who read every line of every contract before signing anything and who kept personal financial spreadsheets that would have been impressive in a professional context. I was a landscape architect. I worked for a firm for 12 years and then, 6 years ago, started my own small practice. Our financial lives were largely separate. We had joint accounts for household expenses, but our professional finances, retirement accounts, and investment portfolios had always been maintained individually, which I had never questioned because it had seemed sensible at the time, and which I now understand was an arrangement that suited Daniel considerably more than it suited me, for reasons that became clear only after he filed. I want to be honest about the marriage because I think honesty about it matters for understanding why I did not see what was coming. It was not a dramatic marriage. There were no scenes, no obvious signs, no sudden shift that announced itself as the beginning of the end. There was instead a slow erosion of warmth, of shared interest, of the specific quality of being known by someone who wants to know you. That happened gradually enough that I kept adjusting to each new temperature without quite registering how far the thermometer had dropped. Daniel filed in October. I was not surprised, exactly. I was, I think, relieved, which felt like its own kind of grief. Chapter 2. The disclosure Daniel's financial disclosure was thorough, organized, and presented in a format that made it easy to review and difficult to question. He had prepared it himself with his attorney's guidance, and it was the kind of document that looks complete specifically because of how much detail it contains. 12 pages, every account listed, every balance noted, every asset described with the particular precision of someone who knows that a detailed document creates an impression of transparency, even when it is strategically incomplete. I reviewed it with my attorney, a competent woman named Susan Park who had handled divorces for 20 years and who told me honestly that the disclosure appeared straightforward. We used a mediator. The process took 4 months. Daniel was cooperative, organized, and reasonable in a way that I now understand was the cooperation and organization of a man who had already moved the pieces he intended to keep before anyone started counting. Here's what I want to ask you, because I think this is the question underneath everything in this story. Have you ever trusted a process completely because the person you were trusting it with seemed to be playing by the rules and felt, later, the specific vertigo of realizing that the rules had only applied to you? Tell me in the comments. I read every single one, Chapter 3. The account Robert Kessler had worked with Daniel for 11 years. He was 61, semi-retired, the kind of accountant who had built his practice on long-term client relationships and who took professional responsibility seriously in the way that people take seriously the things that have defined their working lives for 4 decades. I did not know Robert Kessler during my marriage. I knew his name. Daniel had mentioned him occasionally, the way you mention the people who handle the professional logistics of your life. But I had never met him and had never had reason to think about him. Robert was conducting a routine annual audit of the consulting business in June, 8 months after our divorce was finalized, because the business had a small outside investor who required annual financial reviews as a condition of the investment. He found an irregularity in the loan records. A series of loans from Daniel personally to the consulting business, recorded as receivables on Daniel's personal balance sheet at the time of our divorce disclosure, that had been repaid in full to an account Robert did not recognize and had not previously seen in the business records. Robert pulled the account information. The account belonged to a company called Ellison Strategic Holdings, LLC, registered in Delaware, established 3 years before our divorce filing. Robert pulled the formation documents for Ellison Strategic Holdings. The registered agent was a service in Wilmington. The sole member was listed as Daniel Ellison. Robert looked at this for a long time. Then he looked at the consulting business records more carefully, going back 4 years. He found a pattern of income diversion. Consulting fees redirected from the main business account to Ellison Strategic Holdings through a series of intercompany transactions that had been structured to appear as standard business expenses. He found the commercial property in the Delaware LLC's asset records. He found the investment portfolio. He then, by his own account when I eventually spoke with him, sat at his desk for most of an afternoon, trying to determine whether there was an innocent explanation for what he was looking at. There was not an innocent explanation for what he was looking at. Chapter 4. What Robert was legally required to DOI want to explain what happened next carefully, because I think it is the part of the story that people find most surprising, that the person who unraveled Daniel's financial architecture was the person Daniel had paid for 11 years to manage it. Robert called his own attorney. He explained what he had found. He asked what his professional and legal obligations were given that the financial structures he had uncovered appeared to have been used to misrepresent assets in a family court proceeding. His attorney's answer was not simple, because these situations rarely are. Robert had no direct obligation to me. I was not his client, had never been his client, and the discovery had arisen from work done for the consulting business, not from any investigation related to the divorce. He had an obligation of confidentiality to Daniel as a client. What he did not have was an obligation to continue providing professional services to a client he had reason to believe had used financial structures he had helped maintain, legitimately, without knowing their full purpose, to commit perjury in a legal proceeding. And he had, his attorney explained, a professional responsibility under accounting ethics standards to not allow his work to be used in furtherance of fraud. Robert terminated his engagement with Daniel in writing, citing circumstances that have come to my attention that prevent me from continuing to provide services in good standing. He also, and this is the part Daniel had not predicted, retained copies of the audit findings as part of his own professional records that were, under subpoena, fully producible. Chapter 5. The call I did not expect. Received a call from Susan Park, my divorce attorney, on a Thursday afternoon in August. I was in the middle of a client site visit and stepped away to take it because Susan did not call without a reason. She said she had received a communication from an attorney representing a former accountant of Daniel's, indicating that the accountant had, in the course of professional work, discovered financial information that appeared material to our divorce proceeding, and that the accountant was prepared to cooperate with any legal process that might result from that discovery. I sat down on a garden wall my client had recently installed and stared at the landscape I had just been assessing. Susan said she needed to ask me a question. She asked whether I had had any reason, during the divorce, to suspect that Daniel's disclosure was incomplete. I told her I had not, that I had trusted the process because Daniel had seemed to be engaging with it honestly. She was quiet for a moment. Then she said she was going to need to make some calls and that she would be in touch. Chapter 6. What the forensic accountant found. Susan retained a forensic accountant named Patricia Eng, who spent 6 weeks reviewing the materials Robert Kessler's records provided, the subpoenaed records from Ellison Strategic Holdings, and Daniel's original divorce disclosure. Patricia's report was 42 pages. I read all 42 pages, twice, because I am the kind of person who reads things completely even when reading them is uncomfortable. And reading this report was deeply uncomfortable. The hidden assets broke down as follows. The Delaware LLC held a commercial property Daniel had purchased 18 months before our separation, using funds from a business account that had been characterized in the divorce disclosure as a business loan repayment. Current appraised value at the time of the forensic review: $640,000. The investment portfolio held in the trust established in Daniel's mother's name, funded through transfers Daniel had characterized in the disclosure as gifts to his mother. Current value: approximately $800,000. Daniel's mother, Patricia noted, had provided a declaration stating she had not been aware the accounts were in her name and had never had access to or control of the funds. The redirected consulting income, accumulated in Ellison Strategic Holdings over 4 years, net of the commercial property purchase, approximately $660,000. Total, $2.1 million, approximately, not including the appreciation on assets that had occurred during the 8 months between the divorce finalization and the forensic review. I looked at these numbers for a long time. Then I looked at the $1.3 million that had been divided between us, the house, the retirement accounts, the joint investment portfolio, and understood with the particular clarity of a mathematical fact that I had received approximately 38% of what I was legally entitled to. Chapter 7. What Daniel did not anticipate. Daniel's construction of the hidden financial architecture was by any objective measure sophisticated. The Delaware LLC was a legitimate business structure with legitimate uses. The trust in his mother's name was legally formed. The consulting income diversions were structured as intercompany transactions that required forensic expertise to untangle. He had not been careless. What he had been was wrong about Robert Kessler. He had, I think, assumed that Robert would conduct the annual audit, note the loan repayments, and file the business records without examining the destination of those repayments closely enough to find the LLC. He had perhaps assumed that 11 years of professional relationship created a loyalty that would, consciously or not, cause Robert to look away from something that might be uncomfortable to look at directly. Robert Kessler had not looked away. He had pulled the thread, and then he had called his attorney. And then he had done what his professional training told him to do when he discovered that his work had been used in a context he had not consented to and would not have consented to if he had known. Daniel had built his hidden architecture with great care. He had not built it to withstand the scrutiny of the person who knew his finances most intimately. Chapter 8. The legal processi will compress this section because the legal process was long, and the details are less important than the outcome. Susan filed a motion to reopen the divorce proceedings based on fraud upon the court. Specifically, Daniel's submission of a materially false financial disclosure under oath. This is a serious matter in family court, treated seriously, because the entire mediated divorce process depends on both parties disclosing honestly. The motion was granted. Patricia Eng's forensic report was entered into evidence. Robert Kessler provided a declaration, under oath, describing what he had found and the sequence of events that had led to his disclosure. Daniel's attorney attempted several arguments. The trust was a legitimate estate planning vehicle. The Delaware LLC had been established for legitimate business purposes. The consulting income diversions were standard intercompany accounting. None of these arguments addressed the core finding, which was that Daniel had submitted a sworn financial disclosure to a family court that omitted $2.1 million in assets he controlled. The legitimacy of the individual vehicles through which those assets were held was not the question. The question was whether he had disclosed them. He had not. The settlement negotiations that followed were, by Susan's description to me, straightforward. Daniel's attorney was not in a position to argue around Patricia's 42-page report and Robert's declaration. The question was not whether the hidden assets existed that had been established. The question was how the corrected division would be calculated. Chapter 9. Where things stand, the corrected settlement was finalized 4 months ago. I will not give you the specific number because it is not the most important part of this story. I will tell you that it reflected the forensic accountant's calculation of my entitlement from the full marital estate, including the hidden assets, with adjustments for the time that had passed and the appreciation that had occurred during that time. It was significantly more than what I had received in the original settlement. I called Robert Kessler after the settlement was finalized. I had never spoken with him directly during the legal process. Everything had gone through attorneys, and I wanted to say something to him that attorneys do not typically convey. He answered his phone himself, which I had not expected. I told him what I told him, which was simply that I was grateful. That what he had done had required something, professional courage or personal integrity, or whatever you call the quality that makes a person pull a thread when the comfortable thing would have been to leave it alone. He was quiet for a moment. Then he said he had not done it for me. He had done it because he could not, in good conscience, continue to have his professional work associated with a financial structure whose purpose he now understood. I told him that was exactly the kind of thing I was grateful for. He said he hoped things were going well. I told him they were getting there. We said goodbye. I have not spoken with him since, and I do not expect to. He was not a character in my life. He was a careful man who did his job honestly when doing it dishonestly would have been easier, and that was enough. That was actually everything. Daniel and I do not communicate. We had no children, which simplifies things considerably. His consulting business, I understand through mutual professional acquaintances, has changed significantly in the past year. Fewer clients, lower profile, the particular quieting of a professional reputation that happens when certain things become known in a small industry. I am still a landscape architect. My practice is still small and still the kind of work I wanted to do when I started it. I recently finished a project, a residential garden in the neighborhood where I grew up, that I am more proud of than almost anything I have built professionally. I want to be honest about this, entirely at peace with the 19 months between the original settlement and the corrected one. There is a version of this story where Robert Kessler conducts his audit 6 months earlier or later and finds the same thing. There is a version where the outside investor who required the annual audit decides not to renew his investment and the audit never happens. There is a version where everything Daniel hid stays hidden, which is, I think, what he counted on. I try not to spend too much time in those versions because they are not the version that happened, and the version that happened is the one I have to build the rest of my life from. It is enough. Most days, it is more than enough. If you have ever trusted a process that someone else was gaming and found out later, I want to hear about it. Tell me in the comments. I read every single one, and if this story meant something to you, share it with someone who is in the middle of a process they are trusting completely, who might benefit from knowing that sometimes the thread that unravels everything gets pulled from the most unexpected direction. The careful people are everywhere. Sometimes they work for the other side, and sometimes, when they find something they cannot in good conscience ignore, they make a phone call that changes everything. Skuzber if you haven't yet. I'll see you in the next one.